Hi, Joe Kehrig with the Kehrig Real Estate Team, and this is your San Ramon Valley update for the week of May 1st, 2023. Can you believe it's already May? What we're going to talk about today is everyone's talking about a recession. Well, if you look at the way they used to what they call the recession, we're in a recession now, but obviously they've kind of moved the goalposts a little bit, but now everyone's saying we're going into a recession. Well, how does that affect the real estate market? Well, let's take a look how it would affect it. First off, a mild recession starting later this year with a recovery over the next 2 years. That's what they're expecting, that it would take probably about 18 months once we work into the recession for them to work us out. And how would housing be impacted by a recession? And it says during a traditional recession, the Fed will usually lower interest rates. This creates an incentive for people to spend money and stimulate the economy. It typically leads to more affordable mortgage rates, which lead to more opportunities for home buyers. This is exactly what we've been talking about for months. We've talked about as rates have gone up. Remember, we talked about marry the house, date the rate. Because what happens is when the government, inflation's out of control, they raise the rates to push us into a recession, to keep us from spending money. But once we're in a recession, when things have settled down, now they lower the rates so people can go out and buy more and pull us out of a recession. So expect to go into a recession, if we're not already in one, in the next few months, and then take about 18 months as the Fed will lower the rates to pull us out of the recession. And that's exactly what's going to happen based on history. So what are the pros and cons of buying during a recession? Well, here it is. Number one, the pro, there's less competition out there during a recession. There's lower prices and there's lower rates. So it's a great time to buy. But what are the cons? Well, the stricter lending requirements. The lenders get much tougher when we go into a recession as far as loaning the money. And there's fewer options available to the buyers out there as far as financing. And here's the number one thing, the economic uncertainty. The unknown is what people are afraid of, and that's why people pull back when they don't know what's going to happen. So again, the pros, less competition, lower prices, lower rates. The cons, stricter lending requirements, fewer options available with as far as, less homes on the market, and the economic uncertainty of buyers. You're just not quite sure what's going to happen. And remember, a recession does not mean falling prices. Look at this. Basically, out of the last 6 recessions, prices really dropped once in 2008 during the huge, almost the housing market pushed us into a recession. 1991, it went down 1.9%. So for the most part, it stayed the same. Our prices have gone up 4 to 6% when there is a recession for all the reasons we talked about before. And a recession does mean falling interest rates. Look at this from the 1980, 81, 91, 2001, 2008, 2020. Basically, the rates went down. Do you remember after COVID, they lowered the rates? That kind of what got us into this inflationary type thing because they were so afraid after COVID. They wanted to stimulate the economy. Well, real estate market was already doing good. Remember, February was the best February 2020 was the best February in 13 years. Then we went into COVID, and then because the whole economy went down because of all the closures, they lowered the interest rates to pump up the economy. Well, the housing market was already heated, so obviously that's what we went through in 2021 and the first half of 2022 was an overheated real estate market because it's literally, they were pouring gasoline on a fire. So now we look, the recession does not equal a housing crisis. And that's what you have to remember. Matter of fact, like we showed you, as rates go down, prices actually rise during an inflation and during a recession in most periods. So how's it affecting right now? We talked about, we wanted to see during the 2 weeks of the Easter spring break, not a lot of homes were going to come on the market. And then after, more homes would come on the market. And it's not so much, we know more homes are going to come on the market, it's more the absorption rate. The buyers out there, with the higher interest rates. Well, you look at the San Ramon market, you see more inventory came on the market. Pending stayed about the same in San Ramon. Danville, look at active stayed about the same. Pendings went down a little bit. So pretty steady. Same thing with the Blackhawk market. You see actives and pendings almost stayed exactly the same. But look at the Alamo market. That actives actually went down and pendings went up. So we almost have as many pendings as actives in Alamo, where the average price is almost $3 million, which is unheard of. And then the Dublin market, you can see that the pendings actually went up, active stayed about the same. So we still have a seller's market. There are still not enough homes on the market, though we're starting to see a little increase. So the next couple weeks, if we continue to see the increases of inventory on the market and the buyer is still pulling back, we might see the market level out a little bit. But right now, it's definitely a seller's market. There are some segments that are a little bit slower, but if you have a nice home that's priced right, that shows well, you're not only going to sell it, you're probably going to get multiple offers. Because look at this. Everything's over 100% again. It went all the way down. If you remember, we were during the early 2022, everything was selling 115 to 120% of asking. Then we went all the way down to 92, 93. And we'll now look at down the line, we're all over 100% of asking. So everything is selling for more than asking price on average. But remember, every market is different. Every neighborhood is different. Your home is different than the one down the street. If you just want to get an idea of where the market is, give us a call and we'll sit down, because you know what? We're more consultants than anything else. We're here to sit down with you and give you the pieces of the puzzle that we can, and then you make the best decision for yourself based on all of your personal pieces of the puzzle. So give us a call. Again, Joe Kehrig, 925-487-6838, or joe@kehrigteam.com, or visit our website, www.kehrigteam.com. Have a great week, and we'll see you next week.